For a manic Monday, it has turned out to be for stock markets globally, and you can blame it on the soaring oil prices that have triggered such a massive sell-off when it comes to the global markets. Brent crude came dangerously close to that $140 a barrel mark, and the US crude topped that $130 a barrel mark for the first time since 2008. Now, oil prices are hovering near those 13-year highs as US and its allies are considering imposing a ban on Russian oil imports. Now, this will lead to a massive crunch in oil supplies and will jack up oil prices further. In fact, JP Morgan has predicted levels of somewhere around $185 on the crude for the current year. Now, the oil shock sent global stocks into a tailspin. The Indian markets opened with a gap down, with the Nifty tumbling below that 15,800 mark at one point in time, and the Sensex crashing somewhere around 1,600 points or so. When it comes to Asian markets, they were not spared either, because most of them shut shop with losses to the tune of 3 to 4% apiece. Wall Street shut shop in the negative zone last night, and today we saw the US futures also extending those losses and losing somewhere around 1.5 to 2% a piece. Other asset classes were also not spared. If you look at the rupee, well, that tumbled to its record low versus the dollar. Remember, a high oil prices don't bode well for the Indian economy. Now, India imports 86% of its oil needs from West global nations. Now, higher prices means a high oil import bill for India, and that means a higher current account deficit, and this may put India's fiscal math into a quandary, and that is why we saw the rupee tumbling to its record low versus the greenback. Remember, another thing that is not boding well for the Indian markets is foreign investors who have turned sellers in recent months. In fact, FIIs have withdrawn somewhere close to 2 lakh crore rupees from the Indian markets since the month of October, and now with the Fed looking to raise interest rates later this month, we may not see them make a comeback anytime soon. So all in all, the situation is looking pretty grim, because this Russian-Ukraine conflict has led to a lot of volatility when it comes to the stock markets, but for oil prices, well, they have seen a sharp surge since Russia's invasion of Ukraine began. When you look at the gold prices, well, they crossed the $2,000 per ounce mark for the first time since 2020, as investors turn away from risky assets and look for refuge in the yellow metal.